Good morning, good morning, good morning. Okay. And good morning. Welcome to Risk Neutral Trading. Yeah, everything's working here, seems so. This is my virtual trading journal. I trade live, real time, only vetted setups. And I trade live, executing on Bookmap and using IRT for charting. As I said, I trade live only, never a replay or a recording. Now, the problem is that I don't intend this to be for trade or financial advice because I'm not licensed to do that. So please read the description in the disclaimer in the description here. I just watching what happened with the markets overnight here. It's quite a big dump, and then they brought it all the way back to where they sold it. That's pretty interesting. And I'm not sure whether this was just a squeeze the other way or what. But anyway, let's get on with the idea of the stream here is that it is it's my virtual trading journal. So everything that I'm watching on the screens, Bookmap and IRT, is captured in the video, and my voiceover provides insight as to what I was thinking at the moment. And that's how it completes the record. And it is completely transparent and fully accountable. You notice that I stream the entire monitor rather than just the application. So the bottom down here has any open programs, the system clock to the second, and the date, which ties back to Bookmap and IRT. Yeah. Okay, I think that's good enough. I'm not in the mood here. It's been a short night, and I got some other stuff going on in my head, which is a sign to be extremely aware in trading. If you've got emotional tilt or anything going on, you should very definitely be aware of that and basically not trade as far as I'm concerned, but we'll see how this goes. So for the numbers today, the first number or news, my oldest news source is investing.com, which has essentially normal economic calendar events and numbers that they report in their calendar. I prefer this one for screen snapping and putting into Discord or wherever else. It's just clean. It's only the normal events. For example, today we have Michigan numbers. Is about all we've got out this morning at 9 o'clock. It's both of these news sources are free, and you can filter them for wherever you want. Also, there's you can earnings and various things here, and you notice that the event title turns to a URL so that you can, if you don't know what Michigan numbers are, consumer sentiment, you can click that number and go find out all about it. The other news source that I use is Financial Juice. And I like it because it pulls non-economic events scheduled into their calendar, but events which everybody knows has a high potential for risk in the markets. Like right here, Trump's going to speak at 12 o'clock. Trump's going to speak at some more at 12:30, and then he's going to be signing stuff at 15:30. Well, I'm going to be very aware here because I'm sure everybody recognizes, there's no political comment here or I'm not trying to say that Trump should not be doing these things, but I hope you're aware of the fact that there is a potential risk for the market. Let me just show you right over here. Here was the open. Here was the Globex Open last night. This was a comment by Trump. Wasn't right, but that was a comment, and that's what the market did. And then it pulled right back again. But if you're long, or short, or in a position, that could have a real impact. That's 26 to 50. That's 25, 26 handles. For example, it was fine. That's the job of the president, is to do things like that. But in this particular environment, it's extremely risk potential involved with those kinds of things. So I appreciate that they pulled that over here into the market. And the reason I say that is, in today's environment, your primary job as a trader is to protect your account. The fundamental way you protect your account is risk management. And if you don't know about a risk, how can you manage it? So that's where we are. Then the right side over here is more or less a running squawk box. So those are the two news sources I use. Now let's look at the pre-market. I've been doing this Globex stream for the last 4 weeks, and to see if there's any interesting trade opportunities in that period of time. Now, I shut the stream down right about here. I had taken a small trade. I actually closed it back out for scratch because I did not want to hold into the night. I was tired and there was some drama going on here. So I closed it out, and then, of course, this happened. With basically no heat on my trade would have been fantastic. But if you're having any kind of emotional tilt or any kind of issues going on, the best thing to do is get away from the mouse. That's my part of my trade plan. So that's what I did, unfortunately, but there you go. And then they pulled them back up over here. So what do I expect is going to happen? Well, this little white nub right down here is where we're trading now, 73.79 half. So we are just now outside. We are very definitely a gap down, because here's the close. And here we are trading down here. Here's the previous low. So we are just a few handles. Well, quite a few, because this is now, the scale is off because of that big drop. This is 90 and we're trading at 70. So we're 30 handles outside. Bar, I guess you'd call it. What do I expect to happen? Well, I think that there's a lot of crazy going on right now based on this geopolitical stuff and the political drama that's unfolding. It's crazy. Every day the news cycle seems to be full of something else more crazier. My initial reaction is always, if our inventory is short overnight, typically there's responsive buying to take profit. That makes sense. This is Friday also. So I'm going to say we're going to open, we're going to have some responsive buying, and then likely rotate and look for what this market's going to do. I'm not going to make a call one way or the other. This is investing.com, by the way, which is, Investor RT. My charting package, these are the mini tabs. Mini NQ, and this is the higher time frame chart for the micro, and this is the mini market profile. I don't change this back and forth from mini to micro, but I do change it from full session to RTH session. This high time frame chart. Oh, by the way, I also have a tab for the minis. Same exact layout. So the high time frame chart here. First, something about the investor RT. In the header of every window here, or tab, or whatever you call this chart, is the instrument, the periodicity of the chart, or the chart type, and the session. So these are daily bars in the RTH session. Each one of these represents one full RTH session. Wherever volume overlaps or price overlaps, I bring the volume profile around them. And that gives me a micro composite POC, high and low volume nodes, etc. This is where we're trading now. We're gapped out. If they go down and don't close the gap, this will start a new market profile, or micro composite profile. Sorry, my head's not in this, so I'm going to be real cautious this morning. These high and low volume nodes of the current volume profile are represented by the red and green lines here, but the values push automatically to Bookmap. So do the session prices. See what the hell we got going on for volume here. Well, higher than normal at this for this time of day. Looking back at 20 sessions and about normal on the ATR. So this is Bookmap, which is the charting package and where I trade, execute live only. The columns are right to left. Micro composite column where I manually enter these, high volume node, low volume node, gap up, gap down, those kind of things. And these are the high and low volume nodes pushed automatically from IRT. This is the full session volume profile, which started plotting last night at 1700 and will continue through 1600 today. It's Friday, so it won't start again till Monday or till Sunday. The volume profile for the RTH and the delta for the RTH will reset at 8:30 this morning. Let's hope. The statistics column, which is very important to me. First thing we're going to do is determine the statistic open type, and then we'll delete the stats from yesterday and put in today with their associated prices. These are the session prices, pushed from IRT. I don't have a dome here anymore, but I have the most important columns, which are the resting liquidity for the ask and the bid for all of level 2, all price levels, and the session prices. There's no indicator on my Bookmap or my IRT. I try to keep things as simple as I can because that's the way I need to have it. So there's only volume, delta, statistics, price levels or price action, and that's it. Notice there's a POC for the full session down here and for the RTH session here. Little different color yellow, if you can notice that. There's a VWAP for both, and there's a mid. That's it. And these lines here represent the session prices, or sometimes, like the case of today, I will be pushing some reference lines from IRT over here for the initial balance trade based on edgeful data. This is Blue Boy, which is just a vertical line I put on the first plot or print of each session. So that's the first print of the overnight, and here we went, and there I missed it and was pretty disappointed, and here we are back up here, and I did have a trade on over here, but a short, but I took it off at scratch because I had other things going on that weren't conducive to trading, and I obviously then had a lot of regret right after that. So that's the setup, I think. Seems like I'm missing something because I'm ahead of schedule here, but okay, let's go ahead. In order to trade on Bookmap, you need to activate the trade control panel here, which is this padlock, and then select an account. Select and this is still set from last night when I did the Globex. So, and the number of contracts, then you can close that again, close this control panel window, and it'll still remain active. And I have these also replicated up here for the metrics, plus cancel all and close all. Here's that trade that I scratched. Short. You know, talk about timing, huh? Emotional tilt and, you know, out, apart from trading stuff can have a big effect. And I know that, so I just closed it out right away. You know, so any kind of drama in your life or whatever, it doesn't have to be bad or good, but hi, Panda. Panda's coming to say good morning to the cat. So that's set up there. Now I want to get the hedge instrument set up. Same idea. Padlock. Pick the account. One contract. Close it back out. And the reason, I'll explain the reason I'm using that Lucid thing here at the moment. But first, let's make sure I've got everything else going. So the stats are correct. Multi-account trading is on. That's correct. Okay. So we're going to get the TLab snap will be in about 4 or 5 minutes. Hey, baby. Okay. I'm going to step away here. I got something else to do, and then I'll be right back. Well, there they go. Some more, huh? I don't know what's going on with this market here. Definitely going to be gap down outside day. And yeah, I wish I didn't have all this drama going on here. This is probably going to be, well, obviously last night was some great trading, but I am aware of the fact that if I'm not, you know, firing on all cylinders for whatever reason, to stay away from the mouse. Big disappointment, that's for sure. Okay, the next order of business today would be the TLab snap. And that is Something I do every day at about 8:20. So let me get that over with and posted. Now the TLab snap is this, which I do every day at about 8:20. And earlier in the morning, I post the numbers over there. Now, the TLab is a Bookmap Discord chat room started by a guy named Tom B and continues to be led by him. It's obviously sponsored by Bookmap, but you're never solicited for anything there. And it's there's a good crew of people in there. It's not a live trading room, or is it a trade calling room? But Tom has a lot of good insight about trading and stuff. He's been trading for about 48 years, started professionally, so a depth of experience. I was a lot more active in there for a long time, but I started this channel based on a suggestion from Tom, to focus on your market, my market, our individual markets, and narrate them through the day. And so I need to be able to, I can't multitask well. I can't be yucking it up in a Discord room somewhere and also focusing on my market. So that's why I do this. It's, respect or gratitude, whatever. Okay. Hey, Panda. What? Giving me the stare here. So there's the TLab. I feel like I'm missing something, but I don't know what it is. So if I've forgotten something in the usual, I don't script this at all. So, usually I just go down the checklist going, what? So we're going to open here in about 6 minutes, and I'm not sure what it is I'm forgotten to do, but whatever. We'll see what the market has to bring. And if I'll be real cautious here to trade, frankly. So we have here's the trade yesterday. Guess we can look at that quickly. There was the, oh no, don't be that way. What is going on here now? Okay. The entry, the scale or stop. pulled down, so I put in a trailing stop, and then I brought this to break even because some drama around here. However, it just would have taken the hedge by a tick, and then what a pleasure, huh? What a pleasure for a short. What a pleasure for a short at that point. But, you know, hindsight is everything, isn't it? There we were, and that would have been, well, what was that? 7 and 424. So 60 handles. Timing is everything. Timing is everything, isn't it? Who can figure out what's going to happen next? What is this? This is UAE stuff. We've got the Trumpster talking at noon, so be aware of that. I don't think I can see what I forgot here, so remember that the Michigan numbers are out at 9 o'clock, so top of the hour. We're going to be opening here at the bottom of the hour, and we're just tapping off the lows from last night. Doesn't look right here. There we go. So we're right down here on the bottom. Gap down and outside bar, or, you know, outside, whatever they call it at Edgeville over there. The statistics. That's what I forgot to do. I knew I was missing something. Nobody reminded me. Okay, well, so the statistical open column, the first thing I do is change the title of the column. And what do I expect that's going to be? It's real simple. There's only two criteria. If we open right here, right now, how would that compare to the previous RTH close? There's the close. So it's lower than the close. How would that compare to the previous RTH range? There's the range. So at this moment, we are lower out of range. That's the column title, and I change that every day so that I can just glance at the title if I'm looking at a screen snap or the stream and know what this situation was. Now we're going to get rid of the statistics here from yesterday and go get the new ones for today, and hopefully do that in 2 minutes. Probably not, but let's try. And those come from the statistics. So here we are, lower out of range. System looks back at 1,815 days. Of those days, we opened lower out of range 274. We revisited the overnight low 71.9% of the time and 71.5% for the POC. So we go over here to the overnight low and we go 71.4, no, 0.9% of the time, and the POC was 75.1. So there's the overnight POC, 75.1. Okay. IB, let's see if we can catch the POC real fast here. Previous POC was 28.8. That's up here. 28.8 POC. And the reason I'm doing these initials is that, and these levels first, they're the first that will move when we open, which is going to be 30 seconds. So I'm going to miss a lot of these. I'm sorry. I knew something was wrong, but I couldn't figure out what. Overnight mid is 66.8. The IB high and low, which are going to change quickly. IB low is 59.1. 59.1. IB low, and you got to put the initials on any levels that are going to change when we open. And we're open, and this thing hasn't figured that out yet. Okay, there we go. Now I'll continue these later. I'm sorry, I'm not on, as I said, I'm on tilt here, so I am not going to be. I'll be real cautious about trading. Probably not at all. Whenever there's anything that upsets me, you as a trader, or me as a trader, emotionally or anything like that, you need to be super aware of it. Now here are the percentage lines based on the open so far. You can see how compressed. These are 5-point increments here in order to keep price in range. Crazy, huh? A lot of big movement. So now I need to change book map over here from full session to RTH so that the session prices line up. Here's our open down here. Okay. All right, sorry about the confusion here on this side of the microphone this morning, but hey, gotta be honest, right? It's my journal. Now I'm gonna put Blue Boy on the first print of today, which is, here's 8:30, right? So you gotta be real careful of this active data column. Don't want to have a misfire somewhere, and then I'll be really on talk about extra tilt. That's pretty close. So we're gap down and gap everybody. There's a previous low. It's an outside bar, and we're gap way down, obviously. And this was, so the overnight POC moved just before the open, right there. And the sell-off continues. VPOC migration lower. Boy, this is some violent price action, huh? I'm going to be real careful here today because I'm, we need to be real careful. We have the numbers at the top of the hour. Whatever that's worth. I probably forgot something, but I don't know what. So here's the IB high, the IB high, and the percentage zones within that. There's my usual settings for the scale, which would be 1 point. Got a new mic positioning here. I'm not sure. It doesn't seem to be doing well. We'll see how it's working. Trying to get it out of my face so I have better visibility and off to the side a little bit. It doesn't look like it's getting up to the range it usually is, but I don't know why that would be, other than maybe I'm not talking as loud as normal. That could be it. Otherwise, I think it's okay. So remember, Michigan is the top of the hour. We've got craziness going extreme over here on the lags everywhere on IRT. Well, we haven't gotten even close to closing the outside or the, of course, then the gap. This is a gap low right here. Typically, I would expect all of this kind of volatility on lighter volume when they can shove the market around a lot, but this is there's a lot of volume here. There's a lot of volume as well, so I'm not sure what the hell they're doing, to be honest with you, other than they've just realized that, yeah, okay, this was irrational exuberance and we're going down now. Unwinding. Now there we go. They got the outside bar closed, or outside open. I don't know what the hell they call that in Edgefield. They got a name for it over there. Something. Let's see. And outside days, I guess, is what they call them. Okay. Yeah, outside day was completed, right? Okay. This filter over here is what takes care of some of this stuff. Like that. This is a tool I don't use very much as far as this particular one. I use the tool a lot when it comes to the actual reports, which we'll be looking at the initial balance here. Might as well get that set up, I guess. So today, these are probabilities for single break, double break, no break on the initial balance for today. And well, this is not by day, sorry. Yeah, by weekday. There we have it. On Friday, and we'll start looking at how that's forming up. The with the Edgefield subscription comes a whole bunch of indicators for TradingView, which is something I've never used before, but it's pretty handy, I'll gotta say. I must admit. That's his dashboard up here. And I think I need to get rid of this one now. I don't know, not rid of it, but just deselect it. So here's the opening range. We're 30 handles wide so far, right here. It's the opening continuation candle. There was some pretty big moves last night. There's my bill was short and then got out. Jesus. I went to bed thoroughly disgusted when they got past the IB and one another. It doubled down. Unbelievable. I really need to figure out something else to do. If I'm telling you, this is crazy. Opportunities like that come around rarely are what make your month, make your year, right? We got the Michigan numbers out here in a couple of minutes. And they're continuing to squeeze back up now. More of that responsive buying I was talking about in the pre-market for taking profit. You know, plus a bunch of other stuff, close the gap and all that. But not that I'm any kind of a prophet, but it just makes sense. You know, if you were short all night and in profit, wouldn't you want to take some off on a Friday going into a weekend? And especially in this really unstable economic geopolitical environment. I think so. Me too. Me too. UAE issues phone alerts of potential missile threats. Mambo isn't getting it this morning. Put some long playing jazz on there and in the mood. Remember, Michigan is in about 5 seconds or 10 seconds or something. Let's see what other kind of jazz we've got. I never listened to this thing. I have to. My trading office here and my trade desk is quiet. I don't have speakers. I have my headset on to see how this new mic setting is working out. So. There's always classical, which I like, but a couple of people said it put them to sleep. Piano music or something, classical piano. Oh well. I'm not in the game today anyway. I'm pretty disappointed. I think I would say that the mic is working okay, and I'm not going to worry about it going forward. It's the same. I mean, I didn't change the mic or the settings. I just changed the position of the boom arm. But that has an impact, I guess. All right, so there's our IB high. We just pushed a new one. The Michigan number is out. Not that that's probably shaking anybody's tree, but let's have a look. These, it's up a point. Michigan number sentiment is up a point, but down from forecast. So, I can focused in my eyes, even I'm so back here. Well, here we are. We're almost back to the value area low. They're going to mess around here and get us up to settlement, and they're a ways away from the close. But now there's a gap rules, which I have not put in addressed much. Wacky here. There we go. Gap rules, which are old market profile stuff, like most everything, basically says that, trying to see the best, probably the best place to describe that is here. So here's our gap down, right? Here's the gap open. Both in terms of outside bar, because here's our close, there we are, and also in terms of the gap, which is the open, right there, to the close, which is right there. So there's the gap. 74.34 to 73.81. 50 handles. What the gap rules say are, if we open in a gap and if we close the gap relatively early in the session, there's a pretty vague part for you. And if we are accepted in previous value, there's an extremely high probability in the 90s someplace that we're going to trade all the way across the value area to the other side. If we're rejected back out of value, price is going to continue in the direction of the gap. I mean, it's just logic, like everything else pretty much, but you know, people like to dress it up with fancy words and terminology and stuff, and really it boils down to, I think, boils down to logic a lot. Now remember that this IB here is just continuing to push. It's not an initial balance until 9:30. And that's a whole other stat that we're going to be focused on here in a little bit, so I'll talk about that in a minute. This is still 2.5 points here. I'm easily thrown off by the proportion or the scale with Bookmap because it can get, you know, I'm thinking, wow, that's hardly moving at all. And then I happen to notice the scale and it's 10, 15 points. So, for example, this is 73.77. We're up here at 84.22 already. All right, so that's 50 handles we've moved across this. Back to settlement, which was probably the goal, I suppose. POC, settlement, now the IB. Here's the gap low from the 23rd, which is, you know, not a big deal. I've changed the way I address and view gaps based on my discovery that I was doing it wrong pretty much, I guess, for a long time. I have always looked at a gap. In other words, today, what my gap today would have been previous RTH low to the open. That's really outside bar or outside handle or whatever they call it. The gap generally considered by everyone is the open to wherever we closed. Now there's our previous close. So if they get up to here, that's going to close that gap. That will be a gap close. And I'll get that stat in there, by the way. We never did get that finished because I had... So here's IRT. They conveniently highlight the correct open type after 8:30. So the previous close is 40.4. So there's a 40.4% probability today that we're going to get to right there. And I am not cheating here at any, because obviously, think about it. The close was the close yesterday. It doesn't change. I could put it in there 2 weeks from now and it would be correct. Opening mid, is that right? The ETH mid should be the right thing, and that's 66.9. The reason I like to have these complete is for the recording and for the stream, so that they're, you know, where they ought to be. Overnight VPOC, what the hell was 71.6? Both of them. So there's our gap close. If we've closed the outside and we're heading for the gap, if you're a gap trader, you're a happy person pretty quick. That's really disappointing. Okay, where are we now? Well, we haven't set the IB yet. And it's huge. Jesus. 73.60 to 74 quarter. Wow. 60 point IB. Best seen here, I guess. You know, it's been some pretty crazy volatile days here. This is the ES we're talking about. This is not the NQ or some weird relative of a snake. You know, this is a pretty one of the reasons most people trade it is high liquidity. It tends to, you know, behave quite nicely around levels, but wow. This little dipsy doodle right here is 10 points. Basically, 17 to 25, 26, you know? That's the scale thing I was talking about. Well, let's see what the probability of closing the gap or closing the outside thing is on Edgefield. I'm going to go, hold on a minute here. I'll be right back. Okay, what was I going to do? Let's see here what these stats say. I've not done this one before, so we'll have to look at it. Well, where's the outside? Where is it? Maybe I'm crazy and made it all up, huh? Outside day, there we go. Okay, MES. Haven't closed it yet, but boy, are we close. Into the value area. Now, this could be a situation where are we accepted in value or not? That's one of the gap rules. Here's what I'm talking about. There's the value area low from yesterday, settlement, IBI, and here's the close. So this took care of the outside day. And this would take care of the gap. Let's get back to what we're doing here. Sorry. Well, how can I make a template here? What happened? I thought I had more up room here. That's pretty weird. What happened to that? There ought to be some more menu at the top of this thing in order to save this template. I thought it is on all the other ones. That's pretty weird. Huh. Oh well, whatever. It is what it is. Here we go. Bullish outside day, bearish outside day. There's a 76% probability that we reverse back up and close it. 34, wait a minute, bearish. 25 instances, 19 closed, 6 did not. That's not a lot of occurrences. Actually, let's go a year. They're going to do it. And there you go. They closed the gap. Well, that's pretty interesting. All right, let's jump over to that gap rule thing. That's kind of interesting. I don't know why that went away. Something's wrong here. You see this top of the chart is cut off? Let's just do something here. Well, that's pretty weird. It's not presenting properly. It's not laying out. That's why I don't have that outside day. And the ability to put on a to create my own template. Okay, let's look at gaps. Gap fill. That's the first one they always want to do. This is what should have been there. My template selection and how to save a new template. This should have been it. MES 1 year customized gap fill standard sub-report. So there's a 62% chance we did that. Let's look by days. On the Friday, gap down has a low probability of filling. 61% did not fill. Oh, interesting. What's going on over here? We're getting ready to be down here to the IB. Now look at the size of this IB. Well, we've covered the whole territory, right? So our IB is definitely filled. Filled, Jesus. Boy, I am rummy. The first level put in was the IB, excuse me, was the low. And we've got a few minutes to go here before we have an actual stat in place. So let's cut to the chase here and get back to the here. Let's look at the retracements. No, I don't know. Oh man. MES 1 year, what we want to look at. Oop. Hold it, wrong button. Sorry about that. We want to look at the standard, which by weekday. So there's a 78% probability of a single break on Friday and a next to nothing, 20% double and a 2% no break on a Friday. So what we're going to do now is move to the next report, which I find the most insightful actually. And that's this. If the IB high was formed first, then this. If the IB low was formed first, then this. And that's pretty amazing today that this is, oh, wait a second. We got to change our custom stuff here, which is pretty important. And Friday. There we go. Now we go. 82% probability we're going to break the high. We're going to take the IB high. 17% we're going to take the IB low in this configuration. Then, without any ending zone, which looks to be high right now. Next thing would be to look at the retracements. Assuming the low high was taken first, we got a 53%. We're going to pull back to the 25. 26% will come back to the 50. So that says basically if we break out up here after the IB set, we break out the IB high, there's a 53% probability we'll retrace to this 25, and only 26% will make it back to the 50. So there's now the next thing to be aware of is look at the range. Here, we've got 35 to 17. We've got 17 handles wide. So this is a situation where a lot of people, and I often waffle back and forth about whether to front run the range or use the sequence exactly as it's presented in Edgeful, which is to have the breakout, then the retracement, targeting the breakout. In this case, there's another way to look at this also, which is mean reversion. If we break out the high, there's a 68% probability we're going to retrace to the 25. So 68% probability, 69% that would be a mean reversion back to here. Not much better down to the 50, but so it's two ways to look at the data. And at this point, I'm disappointed in general. So there, and now the only data that we're lacking here at the close will be the ending zone probability. And the way that those are assigned is as follows. Opposite the first level filled, in other words, up here, it's 0 to 25, 25 to 50, 50 to 75, 75 to 100. which of those zones to use is dictated by the closing price of the final candle in the opening range. So if this were the final candle in the opening range, the closing price is in the 0 to 25 zone. And I think now we have a couple minutes to go. We'll see. The last bar is a little deceiving because it will open in the range, but it'll close outside. So that's the cutoff. $76 point IB. Jesus. Nearly 20 handles on every zone. That's pretty amazing. I need a candle clock on this thing to see which is forming first or when it's going to close, because I'm not sure if this was the ending zone or if this is going to be the last candle. Well, let's see here. It looks to me like this one is going to, I guess, opened at 25? Is that what that means? $20, $25. Now this will be the closing one. I guess that's how it goes because they're 5-minute bars. Remember the gap rules now. If we trade up and close the gap and are rejected back out of value, there's a high probability we'll continue back in the direction of the gap, which would bode well for the mean reversion idea over here. And we're not exactly ripping past the close. Yeah, so this is the closing zone is the 0 to 25 right here. So we'll jump back to the edge fall. We'll get that zone in there. Ooh, wait a minute. Nobody move. Wrong one. We need to get to rejection. Zone. 0 to 25. 82% probability we're going to break the IB high first. 17% we're going to break the low. So that makes perfect sense, doesn't it? And then we have the retrace, which says this. It says this, I'm sorry, because this is the high. So there's a lower probability that we're going to retrace to the 25 and about another 50% down to the 50 line, because the IB high is likely to be broken out first. So there we go. Those are the stats. How are you going to play them? I don't see the VPOC. Well, let me do something quickly here. Let me reset these zones and see what happened. Didn't change much. I don't see the, in IRT, I have these VPOC migration here. And I don't see that over here in Bookmap. But there is our IB is formed. Now what are we going to do? Are we going to take it out? We're supposed to. And then are we going to continue on, or are we going to retrace? Try to see if some coffee will get me going here. Well, barring some geopolitical nonsense, we don't have anything to worry about until 12 o'clock. You know, speech-wise. Well, quite a day, actually. I would have, when I went to bed last night after watching that drop, I wouldn't have put money on this closing the gap and the, well, obviously you got to close the outside day in order to close the gap. Wouldn't have put money on that. But we definitely did so right there. We haven't taken the IB yet. Yesterday we did not. Yesterday was an inside day because these huge IBs. Jesus, I'm afraid to look at this. Holy crap. 400 and 480 points. The IB on the MNQ. Am I wrong? No. 661, 182. Wow. That's a lot. Four hundred and eighty something points. Wow. I have to stop and think about that one. I'm pretty sorry. I'm pretty wore out today and on tilt, but that's definitely the case. So I'm gonna try to just keep my head down. You know, head down, ass up, and not make any stupid mistakes. Remember, this is not well in the terms of typically using Edgefield, the Edgefield data. This is not any kind of a we haven't taken the IB yet, so it's still an inside day. Is this a place to front run the IB? I don't know. I don't think that front running is a very, very good idea, frankly. Let's look at it again under the current situation. There's no real the IB low was formed first. This says we've got an 82 with all Ending zone, we didn't do the ending zone. What happened? I did that already, didn't I? So there's a 94% probability that we're going to take out the IB high. Could you lean on that over here? Yeah, I guess so. Oh, well, I could have down here. Having 30-something points. But remember that these statistics don't have anything to do or take into consideration at all the geopolitical stuff and the, ancillary inputs that are affecting our markets. Under this current situation, there's a 94% probability that we're going to come up here and take this IB high. That would be relatively worth leaning on, I think. Boy, I'm tired. I'm going to have to. I didn't get any sleep. There we go. Finally, we get the BPOC migration. Finally. Happened in IRT a long time ago, and as Anton frequently points out, it hasn't happened on the MES yet, according to this, or the ES. I'd love to just throw a trade on here and catch my nut, get paid for the day, and slide on off. Play. But as I've said, each and every day in each and every stream, be extremely on guard. My typical advice is if you're on emotional tilt for any reason, or you got anything like that going on, and you're, outside the trading, it's in the back of your head, but it's outside of trading, then throw the mouse away. And I'm trying, I'm taking my own dog food here, eating my own dog food. I was so disappointed about that, missing that short last night, which would have just really been a great thing, and then a bunch of drama here, and no sleep, which resulted in no sleep, and so I am officially on tilt this morning. Timing's always everything, isn't it? Friday. I'm going to try to get the scale back to where it makes sense to me here. Okay, so there's 1 point high on the scale. That's kind of how I'm used to it. Here's Antonio's favorite VPOC migration, which has never been, never worked out for me. I'm thinking about a front run for this statistic here, actually, and I'm tired, and I think this makes sense. VPOC migration, front run to the statistic for the IB, which would be substantial, 10 plus points. But they're not having any luck getting this thing to go up, are they? So that would be 74.20 half. Did I miss it? Probably. Shit. Happened last night too. I talk about it, and instead of, I talk, not trade, and I missed the opportunity. And anything after that's a chase, which is against my rules. Shucks. Now, the interesting problem here is that this is the VPOC for in IRT, not down here. I couldn't tell you why. It's got to do with where this this volume profile shifted. Man, look at that. I'm standing here talking about it and I don't take it. And there is basically 7 points so far. Now it's going to come back and give me another opportunity. Who knows? Well, something happened there. I don't know what. Well, they got right to the VPOC. You see that? Settlement. Something's happening here I don't like the looks of. Something's all goofy here. What is it? IRT doesn't look right to me. I mean, look at these. Look at the VPOC. The migrating is the yellow line. Having nothing to do with over here. Well, I'm off. I missed my opportunity here, but maybe not. Maybe I saved myself some pain. Real hard for me to think right now. Coffee's not working either. And that's some coffee too, I'll tell you. Vietnamese. Ooh, they took the high right up to the POC. It says. I'm about ready to put a long on over here with the hedge and targeting, playing for the IB high. I'm just holding my breath, wondering what they're really up to. And if if you look at this correctly now, what are we doing? Well, we had the big pop, and now we got lower highs and lower lows. And the way this thing has been moving, it could have well, there you go. It could have a breathtaking movement. That's it doesn't look to me like my charts are updating properly with IRT. You have to remember that I'm looking at both monitors at the same time. Well, there's actually 6 monitors here, but these 2 primary screens is Bookmap and IRT, and they're right in front of my face, so I'm looking at them all the time. We're back to the 25% level, but remember, we have not taken the... God damn, what is going on? Why won't this thing update? Well, fortunately, my don't trade on tilt rule is helping me out here a little bit. I was, starting to feel Monkey Boy zooming around the room here and telling me what a great idea to go long and front run this IB was. And it may still be, but right at the bottom of the consolidation, yeah. Now, the trade management that I have set up here and that I'm testing, i.e. the reason I'm doing the Lucid, I think I explained this in the pre-market, but maybe not. Let's go again. Let me see if I can start this correctly. My trading philosophy is I never trade without a stop, for sure. Targets, generally, when I'm using a risk neutral 2-lot or risk neutral anything, a multi-bracket setup, there's always stops and targets on the entry. This hedge philosophy that has been developing here in the stream, suggested and actually originated with Anton, which I really appreciate. That the purpose of the stream is it's not my way or the highway; it's a collaboration. So, hey Antonio, good morning. Crazy day over here, huh? Crazy day, period, I guess. Hope everything's going well with you. I was just talking about the hedge thing here. I put a trade on last night. I was tired, had some emotional drama going on, so I just scratched it. Literally 5 seconds before 70-point drop. Yeah, it's just magic, And I can prove that, actually. We're having all kinds of drama here. We got right up to the IB. We did close the gap. Of course, the outside bar is closed. We closed the gap here, and then we sold off, and we haven't gotten back to the IB. I was starting to get kind of FOMO here, thinking, oh, I better take a front run for that IB, because with the edgeful data, we have, remember that these huge range today, there's a 94% probability that we're going to take that IB high. But you need to remember that the IB, what the hell is this? NASDAQ? I don't want the freaking NASDAQ over here. What's going on? How did that happen? There we go. The IB is 76 points wide on the NQ. That's a lot. So each one of these is essentially 20 points, right? So if we front run from even the 25% level, you're looking at 20 handles to the IB high. So what I was just talking about was Monkey Boy was getting all excited, telling me how great an idea a long was right about here. When I thought of you on the VPOC migration, and then, oops. So, there we are. Whoops, come on, what's going on here? I'm spooked about that active data column, obviously. Look at that. Short the hedge in, just would have tapped the hedge or, activated the hedge, and then I said, okay, I'm done. I'm out of here. I've got to deal with this other stuff. So I took a scratch, 0, and then that happened. So I was pretty excited about that. It's like, son of a gun. And I am pretty surprised that we were able to take it. We took it all back in the overnight, London, brought it down here again just before the open, and then all the way back across and closed the gap and everybody else. So they are just having all kinds of fun trading this thing today. And we have still not broken the 25 up to the IB high. Whether we're going to or not, I don't know. I was thinking about throwing on a long, front running it with the down around these levels with the hedge, and then just see what the hell happens. Because all we got to do is tap that IB high one time, and that's a and settlement here, by the way, also. So we got back. We closed we were an outside bar. We opened outside of range, and then on top we had about a 50 handle gap, which they've closed. So I'm all kinds of drama going on around here. So I'm taking I'm eating my own dog food about don't trade on emotional when you're on tilt. I do need a trade though that's profitable this week. So, and having missed that one last night, Monkey Boy's still not speaking to me. Not only did I not miss it, but I had it short on, and then just okay, I can't deal with this. I'm not, scratched it off, and then literally 2 minutes before the drop. Timing is everything. And what are we? 10 o'clock. Okay. I am still really thinking that I should have been long right in this area down here. Obviously, if I'd have gotten long at the 25, I'd be real happy about life right now. there's a 94% probability we're going to take this high today. I guess I should just bank on that, trade the stats. I just am a little bit leery. There's we have Trump news and whatever, you know. Mr. Microphone is hitting the airwaves about 12 o'clock. So I don't know. He's got 2 or 3 things in a row. So that'll be fun. I was just getting ready to put the hedge on here, and I should have done so a number of times. The thing that's got me apprehensive is A, my tilt, and then B, this huge low volume node that they've just come back across. How much conviction is there in that? I realize there's a 94% probability with the stats in the closing zone and all that stuff that we're going to close it out. And if we look at the retracement, which of course is only based on the IB being taken, it's not as convincing for the retracement side. So you could actually make a case for the mean reversion. $22.25, huh? I'm thinking I'll put an order here and then put the hedge in place. So if I get tapped, I get tapped. $22.25. Well, they went right by that. I'm so not used to trading on the POC. It's just weird. Your favorite 20s? So there's that one. There's a 20. Then this would be a 17.
Order submitted. Order submitted.
For the hedge. What happened over here to IRT? IRT broke. And the hedge would be, God damn, what's going on?
Order submitted. Order
Filled, I guess. The hedge would be a short. Oh, wait a minute here. A short at 17 for one lot. Am I right with all of that? I don't know. Well, we're only in 5, so let's see what happens. That's a real tight trade, I know. But we'll see what happens. A tight stop, I mean. So that's a problem. Yeah, we got the hedge on, okay. Now comes my big drama is what to do. How to get the hedge off. That's always the problem for me. So we're in at something. 74.20, I guess it was. 74.20. And we're long. Oop. So 17, yep. Scratch is 18 and a half right there. That's right. Here's the problem I don't get about this hedge, and that is how in the hell do I make, what do I do with the leg, and when do I take it off? I've had not good luck with that in replay. Right now, the hedge is on for 10 and 5, so I have, here's the math over here. So there's the entry, there's the hedge, and there's the, I should say, here's the ad, and here's the hedge, and our average in is 18 and a half. So the worst that can happen here is 6 ticks. But at some point, I've got to take off that short leg and have it pay off. Right now, it's down 150, and we're only up $50 over here. So that's a question. That's always a question for me as to how I do this part over here, how I do the short leg and where. And I'm going to take it off right. Nope, not. I'm going to let it play out right here. This is the part I don't understand about this trade. So basically the risk that I always have in this case, in this setup at this moment, is $1.75 over here on the downside, and same thing over there. So it's about $1, about $125 total risk until I take off the short leg, and then I better be figuring out what to do in a big frickin' hurry. And I think I'm going to do that right now. Okay, the short leg is off. Now I got to be sure that we go on in my direction, and this is the part I'm not sure about what to do. So what I need to do now is I need to put I need to put a short down here, and I need to up it to 10 contracts. And I need to trail it. And I need to trail it quick. Right now it's still down $100. Nope, $50. Let's see, where did that short go off? It's 24s. Okay, that's not good.
Order submitted.
Yeah. So there's the stop, and that took me off at net 112 to 350 minus 112. So that's the net position, and that's the problem I have with Bookmap. I can't see the net position together, but this was the stop, this was the short leg, and this was the long leg, and it just didn't make it. Maybe what I'm going to have to do next is just, did we get to 24s? Yeah, I don't know. I got a problem with that, and I haven't been able to work it out, but yeah. It's not like the end of the road, but it is, it's frustrating. A great way to end a real shitty 24 hours. Instead of being up, 30 handles, I'm down 2.25. But I'm out of the trade. I'm flat across the board, and now it's dumping. There's something to be said for that, but I've got to figure out how to do the take the leg off to stay in profit. That's the problem. That's my problem anyway. And I have this deal over here, so I could have, now where did I do that? It's 75.24. No, 74.25. 74.24. Ugh, football. Okay, so there was the hedge. There was the hedge off. And I needed to get up to the 24s here. Wow, I needed to get clear up to here to be, oh, that's screwed up. I got to figure that out, and I don't know. So I'm going to stop doing it until I figure it out. But that's the hedge. And unfortunately, it doesn't show properly down here. The only way I know how to do that is have them both reflected here. So there's the one for the micros. No, that's not right either. Let's see here. How do I do this? I don't know if I can do all it. There's the micros. And that's not correct. I mean, it's not representative because it doesn't show this one here, which I have to figure out how to get all together at once down here somehow, so that I can have the whole thing work, right? I don't know how you do this part. Here, I guess. Yeah, so that would be as close as I could get to a screen snap that actually means something. And it doesn't really mean anything, but it's close anyway. That sucks. I wish that there was a, you know, that it showed the net balance on the account. I don't know what else to do. I mean, this looks great. You know, I could be a YouTube guy and just always have the winning leg showing up. And this is across 5 accounts, right? And I'm not going to be certainly going to try it again. Look at there, right to the same exact point. Boom, boom. Somebody's looking at something there. And will they take the IB high at some point? Yeah, probably. And then I'll be standing here like a dope and not be involved in it. What does that say now? How does that work? $1.25 and $3.50. Yeah, $1.12 and $3.50. So that's 2 1/4. Okay. I'm assuming all this is going to work out in the wash. I don't know. That's the first time I've actually ever even put the hedge on with both instruments on these Lucid, this test thing. So we'll see if they've got any crap about that. I've talked to their technical people a bunch of times and whatever else, and it's all legal and everything. But I want to, you never know till you know. Now, the difference between the hedge, using the hedge theory and using regular multi-brackets, this would have been a full stop. With the hedge, there's the possibility to go across. What my problem is where do I exit the other leg? And in this case, I exited the other leg too late, and it never went across. It never got into profit. And now we're going to probably go up and take out the IB high, and I'm going to be disappointed about that, but that's a different story. So that's the difference between the hedge trade management and typical stop trade management. Is this would be a full stop, would have been over right there. Now, it would have been over for half of the loss because this was only 5 micros instead of 10. So, and I guess if I don't know what to do. I don't know how to do it. That's the problem. But anyway, that's the reason this is the Lucid thing, and that's what I'm trying to figure out. Oh, I think I forgot to put that. Where did I? 41. What? 29, 10. Wait a minute. 17. There they come down to this 10 number, and there's some liquidity there, and turn right around, smack dab. Well, I hope your trading is going better than mine. And your day, too, by the way. Look forward to taking my midday break here. This is all told frustration. And here we go for that IB. Could you have done that right over here, please? No. $17 to $24. That's the problem. Because the scratch then becomes so significant. I mean, obviously, here it would have been no problem. It would have been scratched, but I think 24, I think, was the exit. So 24, 17. Yeah, that's 7 handles. Handles times 4. So that's how many ticks above 24 needs to be in order to scratch, which is, where am I? Somewhere around here I have the scratch. Where is it? Yeah, the scratch is, that's not right. 25 half. Yeah, 25 half. Another full point and a half to hit the scratch level. So that's where the stop needs to go in order, but price has got to get there first. Now we're going to take the initial balance high, and I'm going to be thoroughly pissed. And do I stop and do I take the retrace and all of that stuff? No, probably not. I don't think I better keep pushing my luck here. And there's the IB high. So there's our IB stat. We have taken it, and now we have a something percent probability. We have a 53% probability. We're going to pull back to the 25% zone over here. Means we have a 47% probability we're not. Well, sorry. Right here. Given this price range, this would be a real good asymmetric trade location, right? Here's our previous POC up here from yesterday. A lot of liquidity. If you want to take an asymmetric trade, this would probably be the spot to do that. Looking for a mean reversion back down to the 25% draw, but that looks like one hell of a draw, doesn't it? Does to me. Especially if price is on a rip. The thing about an asymmetrical trade, and they're flashing up here at 40, the thing about the asymmetrical trade is if you put a short on here, you can have your stop a tick above it or two, saying, okay, I'm wrong. But that's, I'm not sure that that's got a lot of good trade management. I'm going to assess the difference here of not taking the hedge and extending the difference in risk and reward using the 5 lots and extending the stop instead of at 12 ticks, the same amount of ticks required for what the hedge total lost, total drawdown was. Maybe that's a better way to look at it. I don't know. I'm lost. Today, that's for sure, is not a good day for me to be thinking about any of that. Well, so far it's just a washout every which way I look on this day, starting last night. Now, the hell is this? There is no, oh, there's the breakout. Okay, so that's the first one. Happened to the, what happened to my thing here? I'm supposed to have another quote page here that's the trading thing. I don't want to not have that. Let's just see here. Trading list, boom. Open, boom. 0 symbols, that's a good thing. With IRT, I want to make sure that this trading list always has 0 symbols, because if it does so, there's no way that IRT can push any trade to a brokerage account. And I, of course, want to be extra, double, quadruple careful about that. Look at us go. Here we are, heading up to 50s now. That's a squeeze. Trump did something. Oh boy, it's a wonderful day in the neighborhood. I don't know. And wouldn't that have been a pleasure? Even with the hedge off, that would have been a pleasure. Its timing is everything, isn't it? If that's the long, which it was, there's no drawdown, there's no stop, there's no add, there's no hedge, and up you go. Up you go 20, 30 handles. Timing is everything. Timing is everything. And I don't know what the hell this never closed out. It never did anything. It shows this order over here, but that's, I don't know what to tell you. Isn't it funny how it just goes right to that liquidity at 50 and tags it out and turns around the other way? Huh? Pretty amazing, huh? Bam. Boom. Why? And remember the gap rules. If we close the gap relatively early in the session, and if we are accepted in value, there's the value area low and there's the value area high. There is a very high probability that price will trade across the previous value area, and we are within 4 points of it right there. Took out the POC. That was probably something they were aiming for. Right there. I really don't know what to make of these order things, and yeah. Do I want to, buy the dip and get long? Not very bad. That's real hard for me to do. Being quick on the draw and shorting the 50 would have been a lot more in my wheelhouse, and 40 handles in the money. Now this needs to be up another 250 points in order to be scratch. That's the problem. Big problem. And if it's just directional without the hedge, you're only working on 5 contracts instead of 10. Yeah, I got to think about that whole dynamic. Anton has good luck with it. So far it hasn't worked out for me. On replay, of course, everything works out on replay. But I have also had problems on replay where I didn't, a similar situation, only not nearly as, dramatic, goes way far against you, and that's your drawdown. You close out, that drawdown's locked in, and then it doesn't, and then it goes back and draws against the other side. So it's a double indemnity. Yeah, I'm gonna be ever present that I'm on tilt here a bit, and so I'm not gonna get any more carried away. As much as I'd like to, all of the monkey boy stuff starts coming in. Fear of missing out, and FOMO, and revenge trading, and I've got to fight my way back to zero, and all, you know what I mean, all those kind of things. What I know is that I actually shouldn't have taken this trade at all, because I am on emotional tilt essentially, and that's one of my rules. This looked like a reasonable deal going for the initial balance high, and in fact it was just timing. Now somebody would say, so you put it back out again over here. Well, okay, but I'm not, that starts feeling to me like FOMO and revenge stuff. I have to deal with that. So the way I deal with monkey boy things is, which is my version of, euphemism for psychology. I try to be really aware of myself here and now. Am I having dopamine? Is it adrenaline? Am I doing FOMO or revenge stuff or whatever? And not let that affect me, my mouse fingers, if you know what I mean. So I'm gonna lick my wounds here and see what happens as the day plays out, but still. I think one thing's for sure, until I figure out a clear system for dealing with the hedge leg, I'm not going to use that trade management anymore until I'll talk to Anton on Monday or whatever, assuming I'm still doing this. And because I feel like I'm, flying by the seat of my pants and not knowing what to do. And as it turns out, I don't know if I made the right mistake or, the right choice or not here. But obviously not, because down here would have been the time to take off the short leg, because this is all profit. Isn't hindsight an amazing tool? The rearview mirror is so wonderful. The short leg off down here, and you're now I'm now in profit X amount of stuff on one mini, not micro. And then up goes the long, and boy, oh boy, oh boy. That's the theory behind it, but I don't know how to judge that. If I was accurate enough at predicting what the market was going to do, I wouldn't need to worry about the hedge, right? I would just put them on down here and take them up there. I got to think about it, and I've tried. That's the purpose of my hedge tool over here, is trying to work out the scratch and what's the best approach and all this kind of stuff. And what is this shit? What is up with IRT, man? Ugh. He doesn't like when some Windows is something. I suppose it might be Windows 11. I don't know. It doesn't like the fact. For example, I'm doing this over here, and IRT thinks it's not recognizing the levels of this application over the top of that one. You see how that worked? Maybe it was the fact that I moved my mouse around. Maybe that's, I don't know. And there are the gap rules almost to the tick. By golly. Who'd have thought, huh? Who would have thought last night? And of course, if you want to look in the rearview mirror and be a real, rock star, you got long at the bottom last night, and now you're all the way up here to the top, however many zillion handles that is. Of course, I didn't do that. Yeah, thanks a lot, Antonio. I'm just struggling here. I'm about ready to fold this whole thing up and go do something else. It's not working out. Yeah, have a great vacation. I envy you. I wish I was going to do that, to be honest with you. Have a great time. Do something fun in my honor, and then come back and tell me all about it. It seems so simple to say, well, I just need to pick a short one trade out of the day, out of a 24-hour period, 23-hour period. It seems so, it seems like, yeah, can't you do that? Well, apparently I can. Apparently I struggle doing that. I have one and then I lose one, and this one cost more than the previous winning trade, because that's another thing about this hedge story. Once the hedge is triggered, it's a 10 lot, so it's a full mini. Now, I realize a lot of people are laughing about that are taking 5 and 10 minis, but in my case, when the hedge doesn't trigger and I take a profit, That's only a 5 micros. So a stop on the mini, or, you know, taking a hedge off wrong, doubles up any win. So that's the risk to reward is off there also. And there's the gap rules. To the tick. Well, actually more than the tick. In case you're still going to be around trading anybody, Trump is going to start hitting the airways here. Let's just look. Oh, let's look. Let's look our other look over here. Yeah, Trump's going to start speaking at 12, and then 12:30, and then 15:30. So, going to be a magic time right here. Son of a gun. Just thinking about that now. Look at them go. Aren't they having fun? Timing is everything, right? So thinking about it though, if I just, I'm going to do 2 things over this weekend when I do a lot of homework stuff. I have to do most of my homework now on the weekends because I'm doing the Globex stream every night. And by the time I've been here 14 or 15 hours on the desk, I'm getting kind of tired. Even on a good day, you know, with no drama. And so I used to spend the evenings, a couple hours every evening doing homework, replay, and working out all these different ideas. But now it's the Globex stream, Globex and Asia opening range breakouts until about 9:30 or 10 or 2100. I'm sorry, 20 or 2100, 8:30 or 9 Central Standard Time. So here's just thinking now. Here was the entry. Here is the ad. At the same time, the hedge goes on. So now I'm in 10 contracts. Average price right here. Okay. And this is 12 ticks, which is where the stop would be if it's a 3-point stop. Right here is the average price in for 10 contracts micro and 1 mini short. So by not taking it off properly here, which of course is rearview mirror, knowing that this was going to happen and not, you know, not being right over here and not knowing this was going to happen. What I'm trying to think about is it more risk and capital effective to widen the stop or leave it alone and just take more entries? Because in other words, I could take 2 entries originally for less drawdown than taking off the hedge leg in the wrong spot and being in 10 contracts right here. Well, right there's the stop where I took them off. This is 10 contracts. I have to do the math about that. It's hard for me to assimilate all that. I guess I'm just getting too old to make, to intuitively understand. I think that's the difference, is Anton and intuitively understands how to manage that hedge leg, and I just do not. Much as I like the idea of being able to prolong for example, the theory of the hedge is, okay, right here is where the hedge is entered, but normally it would be a stop, so it's all over. But with the hedge, you can do this, and you can do this, and you can, in theory, do all of this, and only be risking 6 ticks. The point is, okay, great, but at some point you got to take off that one of the legs, and the other one has got to turn into money. Now, the way I think about that is, God damn, what is going on, IRT? The way I think about that is using a tool here. I guess it's easier for me to think about it. Come on, get over here. I'm going to make this bigger so maybe IRT won't get his knickers in a knot. I look at where I take the hedge off, and then that's the scratch. So price has got to get all the way back to that level in order to scratch. Scratch, meaning even though these are all positive, this is negative. So this is a drawdown, and it's moving 6 ticks, right? 1, 2, 3, 4, 5, 6. This is like a block moving together. For every tick this goes up, this one draws down, vice versa. So based on the math, even though I don't have my little thing here that readjusts these columns correctly, showing enough at the top, the scratch is 20. God damn it. Sorry. The scratch is 25.50. I think it's to do if I spin the mouse around, actually. It must have something to do with mouse movement. Let's check that. No. I don't know what it is. Okay. It's 25.50, so 2.25 points above this, or 1.75 points above this level. Price has got to get all the way up to 24.50 in order to be scratched. Take it off at 0. So I think that's, I'm not sure that's an advantage. Now, obviously, if you've got real clear, clairvoyant skills, and it's so easy in the rearview mirror, well, I got short, I got, in the hedge, and then I took the short leg off down here when I was in the money, however many points, 10 points or so. And then price went that way, and so this was all profit coming across here. This is the drawdown first from here. So once you got here, once you took the hedge off short, that profit more than compensates for here, and up you go. And that's just all profit. But I can't seem to get that to work right. So I'm going to try to figure it out, obviously, and look at here. And it's not like I've, overtraded a bunch or lost a huge bunch of money or anything like that. And these are the evaluation accounts, and that's exactly why. I lost exactly 0 money from my real live account. I lost some evaluation bucks over here, which were profit, and I'm still in profit. So there you go. But it doesn't, in my mind, that's a trade is a trade, and an account, I don't even think about the difference between real money And sim money, I'm not one of those guys. I actually envy those people that can, YOLO and do all that stuff. I cannot do that. This is burning a hole in my ass just as bad because I lost some sim money here or some evaluation money here as it would if it were my account. It is my account as far as I'm concerned. Yeah. Truly a lot to think about. I don't need this extra. I certainly don't need the extra drama, that's for sure. I got enough problems right here in front of me. But hey, that's life, right? And I realize that. Huh. And in the rear view mirror, of course, I knew exactly this was there's our high and we couldn't get there. So I shorted that, and that's the asymmetric top. And, of course I didn't do any of that crap, but that's how the rear view mirror works. And I wish I could understand that. I wish I could understand that at the moment. But I can't. I mean, I don't. Let's put it that way. I guess I could. I can. I believe that I can, but I did not. And is this, what do you call this thing? Head and shoulders, isn't it? So there's a shoulder, there's a head, there's the shoulder, and then it crosses the neckline or something like that. I don't know those price things. I listened to Tom Hogart or his cohort Andy with the first bar negative and the this and the that, and it's like, wow, they're speaking a whole other language. I'm not saying anything wrong with it. I'm saying I just don't understand all the price action terminology. And this makes a lot of sense though. Look at here. Here's this big liquidity that was parked out up here at 50 for a long time. Came into the book at whenever this is. Came into the book at just about 9 o'clock. Okay, 8:56, and they tagged it out. I commented about, look at how it tagged just to the liquidity, and what happened down here. They came right down here. Now this liquidity wasn't in here yet. The IB high was. So this would be a classic IB continuation, wouldn't it? Yes, because the IB high was taken out here. So took the high, pulled back, and this is an classic IB high continuation. In fact, let's see if my old-fashioned beauty over here took that trade. Well, yes. But didn't do so successfully, apparently. No, it took a drawdown. Oh, this is because, yes. This is because the trigger was a short. You see this? There's the A. That's the initial balance. This has only got 3 rules, by the way. This old-fashioned system. There's the there and let me just start by explaining everything, so that might be better. This blue is the continuation zone. The whatever you call those colors are the pullback zone. And these dotted boys on either side of the initial balance high or lower the trigger. So the idea is we take the IB stat, that's the A signal. We either go to the continuation zone or the pullback zone, which is right here, and that's the B. And then price pulls back to the trigger zone. And if it's an A and a B and a trigger, then it's going to be a mean reversion short right there. And that's exactly what it did. And it stopped out immediately right there. Boop. So that's how that one would have worked. What's going on with the other one over here now? Nothing. We had the breakout. And I would have not had any trade on or loss or any other thing had I just traded the system as I have coded it up over here. And the way this coding works is as follows. The breakout is pretty obvious. Open inside, close outside. The trigger is the pullback to the 20, between the 25 and the 50. And that's long. Based on the edgeful data of the straight up. Now, what I got busy trying to do was front run, and I got front run over. Which is, yeah, stupid. To quote Sylvester the cartoon cat, stupid. Ridiculous. There's some other interesting, these are several orb/IB. If you're familiar with YouTube at all, and I'm sure everybody in the sound of this voice is, you know that everybody in there frickin', including, I was pretty surprised to see that Lance Brittstein, the $10 million guy, who's a good trader, there's no question about it. I was really surprised to see he even put a video out about the orb trade, which is, like everybody and their dog. Anyway, what I try to do when I see those from somebody that I think sounds like they might know what they're talking about or have an edge somewhere, I code them up, and there's different ones here. There's the fence, there's the Al Brooks, Okay, so the fence trade would be, in this case, the fence is a continuation trade, as is, and I'll explain the difference. So here would be the breakout's the same on pretty much all of them. Now the fence trade would say, we come down to any one of these bars and it opens above or below, in the direction of the breakout. It wicks into the zone and it closes back out of the zone. That's a trigger long in the continuation. There is no mean reversion in that I'm aware of in this fence theory. The IB stuff, which is what I've got here, and the reason I kind of like that was, first of all, using the edgeful data, and also it makes more sense to me rather than this old original strategy that I have, where I have fixed zones. This is 3 to 5 points above the IB and 3 to 5 points below the IB, period. No matter what the IB is or the volatility or anything else. So I like this idea because it is based on these are percentages of the IB range. So they change, it's variable. And if I have the trigger at this one and the stop at this one, also varies with the percentages, makes more sense to me. The fence trade is similar in a sense that it doesn't. Now, I've put filters in, Here you can see that like because of risk. So if the initial balance is real wide, like right here, 74.35 to 73.60, that's 70 handles, right? 30 and 40, well, 30 and say 60 handles. Then these zones and these pullback areas are a hell of a risk. So I can limit the risk over here with this code. And if the IB is too wide, I just won't take a trade. But that's the reason I thought this made sense, because it was using percentages of the IB. Now, Al Brooks has an interesting one. Let me show you this. Close this one off. This is the, what's it called? B18. So Al Brooks has done some math or another that says, well, look at there, now it's working right. At the 20th, actually, it's the 18th bar in his body of work. 5-minute candle, I'm sure is the right amount. In the RTH, when we reach the 18th bar, we have put in, there's a 90-something% probability that the IB high or low is in place. Or is it that both are in place? And I went one more to the 20. So that means at this bar, these are in place. So if you break out, then that's a directional trade. And I can't remember. I'm sorry, I can't remember all the nuances. I haven't looked at that in a long time. And if you don't break out, you're gonna a very high probability you're just gonna chop around in the middle. Something like that. I have to read it. Al Brooks has a lot of nuance in his stuff. I'm not a student of Al Brooks. Tom Hogarth is, apparently. He's actually in Macau with Al Brooks and company this week, giving some speeches and something else. I guess they're trying to get a bunch of Chinamen start trading. Or at least Asians trading price action. Must make quite a bit of money with his website and his trading rooms, Al Brooks, because he's taken a team of people to Macau and put on an event. So that's not free. So here we are. We took out everything. We closed everything. We actually we fulfilled the gap rules. Yeah. There you go. What I have to do, and I can't, I'm running out of time to do these things. I have to get this positive and profitable consistently. Absolutely. Or I'm shutting it down. I've got to really look at the math around this hedge thing, because I have to look at the math objectively. Obviously, had I taken the hedge off down here, knowing full well that this was the low, and if I'd have been looking at the chart, I could have suspected that. Look at there. We came right exactly back down to this previous drawdown and this consolidation area. Okay. You can make a case for that. This is hindsight, rearview mirror, and I don't ever like to do that, but you do have to analyze, I think it's good to analyze the price action and try to figure out, try to see what there is to see that could have changed. Here we had a pullback. Here we had a pullback within a couple points. Here we had what is this? These are 9s, and this is 10, and 12, okay, within 2 points. Would have made sense, I guess, to take off hedge down here. Positively, it would have been positive then. Whatever it is. 17 to 9. That's substantial. You know what? I just realized something. Football. I can do that right over here. Instead of taking the hedge off at 24, which is where I did do it, if I took the hedge off at around this low, are we watching this? Around this low over here? Say 10s, say 11. 74, watch this. 74, make it 12. Nobody's ever that good. So now you see the point. If you took it off at the 12s, the scratch is way down here. Even though this drawdown has occurred. So this is scratch. So anything at past 1350, oh man, what a drag. I don't know what that is. I'm sorry. Maybe if I'm on full screen, it won't do it. So 1350 would be the scratch. Jesus Christ. Well, you get the point again. And of course, it's just, hindsight is so beautiful. So I'm off down here. There's at 12, wherever it is. So I take it off here. So there's the scratch, meaning that all this drawdown equates to right here. Anything above this, when this leg is off, anything above this point is profit because this is scratch. So even though this is a drawdown from 20 to 13 half, 7.5 points, wherever that went, this is all profit. And of course it turns around and runs all the way to the top, and it's just money in for nothing and the chicks for free. So there you go. I'm tired of dealing with that. Look at that window. As opposed to what I did do. Well, let's see now. I'm not going to be doing any more trading today, that's for sure. Unless, the The old unless, right? That's the classic monkey boy response. But my trades are essentially off the table. We've had the initial balance. No, we haven't. What the hell am I talking about here? We have not had the initial balance retrace yet. This is the first, well, this is the second time we've come back to it. Are we going to retrace to the 25? Are we going to then go back up? That would be the data. I think I've had enough fun losing money in the face of the data here, but front running didn't work. God damn it. Would you quit this? Front running didn't work out very well. I'm going to have to, well, I'll be restarting them. I restart all my machines every weekend and update and do all that crap, so hopefully it'll all come out in the wash. Look at that. Huh. I don't know what's going on. I can tell you what I'm going to do. I'll show this thing who's boss. I'm shutting it off. There you go. Just up a rope, IRT. Now, let it think a while and get its knickers in out of a knot. And so here is, we've taken out the IB high. Now we're back to it again. Will we retrace down? Didn't hear. Well, actually, there was the IB high. We didn't retrace here to even close to 25%. Boop, 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 boop. Didn't again. Boop, 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 boop. What are we gonna now? Looks to me like a pretty strong market. I don't think we're gonna retrace down to the POC levels, and I think trying to bet on that would be stupid. Right now, there's a 53% probability that we'll retrace to the 25. I don't see, and 26% will make it back to 50. Looking back a year, let's see what happens at 6 months. 60, 29, yeah, it continues to do that. But there's not a lot of occurrences, huh? I don't think. 51 days, 43 days, okay. Oh, I'm not on the right window, sorry. What does TradingView say? Well, it says adios amigos. So here we were. And this was where I thought I was gonna front run. And this is where I got spanked and didn't, and should have. Hindsight, very clear, rearview mirror. And there are those folks who would say, well, you just put them back out. I've heard Tom say that. You know, if my thesis is correct and I was stopped, I just put them back out. And maybe that's the right way to go. But in my mind, the minute I start thinking that way, I'm thinking overtrade, monkey boy, you know, revenge trading, all that stuff. Well, maybe that's all wrong to think that way. And now here we are. Are we going to retrace to the 25%, which is about a 55 or 60% probability that we'll retrace to here. 61% probability. The further the day wears on, the less probable I think these things are for me to get involved. There's the IB high and the close. Better start IRT again so Ned and company don't have a stroke. There we go. But I'd only need a small trade to be back and positive, and you know, a lot of movement today, but I am just real wary of that thinking. All right, now get bookmap all organized over here. IRTL, naked volume points of control, pretty funny, huh? This is the micro composite, of course, and the minis are the micros. There we are today. There's everything going on here. This is the RTH, the RTH, the RTH. Okay, let's get to the minis. Again with the naked volume points of control. Is this working over here? Well, there's no lag, but it doesn't seem to want to work very well. Okay, there we go. Back to there. Yeah, okay. So let's see here. Back to settlement and VWAP. Back to this distribution, the primary distribution. This is the RTH, and looks to me at both POCs also. So it looks we've punched up through the POC here, the micro composite POC, and now we got a buying tail or selling tail up here. And we're down below it again. I always get those backwards. I always have to stop and think about it. The theory, I believe, is that if price is going up, buying up, and sellers come in and push it down, opposite of down here, sellers are selling down and the buyers bring it up. That's what I think it says. I'll actually Google that. The buying tail brings it up from the bottom, and the selling tail takes it down off the top. According to the AI thing on Google, a buying tail support rejection occurs at the bottom of a downward action, also known as a rejection area. This is a long wick left by buyers stepping in quickly to reject lower prices. So this is where am I? So this is a buying tail, and this is a selling tail. Okay. Sell it down and buy it up. I guess that's how I'll remember that. Well, there you go. Learned something new today. Learned a lot new lately. And now, what are we doing? Well, we're back to this consolidation. So this is a bar trade on frickin' steroids. If you want to know about that, that's a breakout and a retest after a consolidation. So here's our consolidation, breakout, retest. Yeah, I mean, that's sure. I don't see any way to trade that. I've actually gone so far. Here's what I was talking about. There's a consolidation, breakout, retest. Yeah, exactly. But I don't see any way to do that. Now we are almost, we did nearly retrace to the 25% zone below our IB. So, you know, there's that. And sometimes I think maybe I should just trade them like I used to trade them, discretionary, basically, you know, with probabilities in the background of my mind. But these absolute specific, got to do something. I got to do something to get this off dead center. Anyway, yeah, the bar trade is what I was going to talk about here. I actually even started trying to define the bar trades, something that I could do a the hell happened to him? What is all of this that I was doing over here? Am I on the bar trade? No. Yeah. No. Yeah. There should be these breakout lines going on over here. Here we go. Why they're not showing up over here, but here we go. What I was trying to do here was figure out some sort of an indicator. Obviously, in order to make a strategy that you can back test, which is done, you know, programmatically, you have to be able to define what you're looking for. So these were the bar trade is breakout and retest. Well, you have to define the consolidation that you break out from and retest to. Yeah, there's a pretty good example right over here. I don't know why we're not getting anything. I do know why. Look at here. I'm way out of my range over here. I'm way crazy. Here's our trade today. Why is there not anything? Oh, I guess it's not because it's not fulfilling the range and the bar criteria. So there you go. Yeah, I haven't figured it out yet either. If anybody knows how to do that. Oh, and we're dropping way down in our volume. We were up at about $1.20. Now we're down at 100. And now we're down to 89. So I guess they raped and pillaged enough people that they're content with that, and they're ready for their weekend to start, I guess. Well, there's, you know, in pretty, these are pretty close. This is where your monkey boy can come bite you real hard. There's a 56, you know, whatever it was, 60% probability we're going to retrace after the IB high. We didn't hear, or here, but now we did hear, but not quite. And we've almost come back up to the IB. Well, that's almost in a whole lot of different ways. It does fulfill this and this. You know, we didn't get down past the 25 yet after we broke the IBI. So you could squint your eyes and say that those stats are working out. Personally. Real easy. This training view thing is real nice to visualize, I think. Yeah, we closed the gap. We had the outside bar outside bar closed quick. Then we closed the gap, and now we're doing the initial balance stuff, but not accurately, particularly, but. And, you know, it's important to point out the range again. This is 10 handles, this is 12 handles right here. So that's a real nice move. That's a real nice move. And I don't know what I'm going to do now. I don't think I'm going to take another trade. I hate to go into a weekend on a loss, obviously. But the one thing I hate more than that is to go into the weekend on a bigger loss because I was trying to trade my way back to flat. And there's been points of time when I was trading with discretion, and I would just not accept that and I would trade back. And most of the time it worked out. At least that's what my mind remembers. And that's dangerous because our minds always remember. It's a function of the human condition that we remember the good stuff. That's part of the monkey boy. The DNA wiring that's been cooking in us for a long time. And I'm sure that there's, people in the TLab and people in static and people all over the world are making money today hand over fist, and good for them. I am just disappointed that I'm not one of them today or yesterday. I was talking last night about adding a discretionary component to my trading here, but only in mean reversion terms. I think it's the only way it makes sense. Having not thought through it completely, but for example, an asymmetrical trade up here, this is a mean reversion, absolutely. This is at a high. We tried 3 times to get back up to it. That would be a reasonable place to put on an asymmetric trade, which is right, would be right there. Asymmetric meaning, there's an asymmetric relationship between risk and reward. You can have 2 tick stop, use bracket orders only, have a 2 or 3 tick stop, and then look at the potential back to the level. And again, this was, I think you call that a head and shoulders. I don't see where that's as viable from the middle out. That doesn't make sense to me. First of all, this is the POC, the most traded price and the most likely to have chop. So I think the mean reversion is the only place that asymmetric idea works. Of course, you could look in the rearview mirror and see a million times it works. Here you go. And there's one. And there's one. And there's one. Oh, but of course, that's BS. That's the stuff of YouTube gurus, which I don't. I mean, I'd love to be a YouTube guru if somebody was paying me, $20,000 a month. I could lie with the best of them, I guess, but I wouldn't feel right about it. And that's not my point. Obviously, that's a joke. I'm not sure exactly even how I'm going to analyze this. I guess just the difference is the difference, I guess. So minus 350, you see how quickly the hedge gets built up, jumps on you? Minus 350 and plus 112. So that's 2.25. That's ridiculous. I don't like that. Just standing here looking at this, I would much rather have taken a stop of half that much. I think I got to really figure this out. I know I keep going back over the same old ground, but driving me nuts. 350 buck 12 is 2.25. Now that's so by not addressing this properly, I've let the hedge get ahead of me. $100, which is, it would be better to do it in ticks maybe. The problem I have with doing this in ticks is, I think, wait a minute, maybe not. Let me kick this back to ticks. I don't like having this stuff in dollars. I never do. P&L and ticks. Let's make it as points better. Let's see what points does. 90 points on that side and points over on this side. See, that's the problem. If you look at this in ticks or points, there's 90 points positive, and there's 28 ticks negative. The difference is, but the problem is, in dollars, it's underwater. If you look at this in points or ticks, well, hell, I'm 3-1, right? That's the deceptive thing, I think, that has tricked me out. That's why I went with dollars. And obviously ticks this is points, but dollars is going to be, ticks is just going to be times 4. Like this. Oh no, that's ticks. Okay, this is points. Yeah, minus 7 points and plus 90 points. Is that right? Did I do that right? No, I can't have. Well, wait a minute. Come on. Ticks. Okay, and points. What do we got? Yeah, points and points. Okay. Okay, so there's 22 points, 22.5 points positive in the micros. And there is, hold on, I keep hitting the mic. Boom, sorry about that. And and 7.5 minus. So if you look at that, this is 3-1. And that's BS. That's BS. You look at it in dollars. Now there's going to be something different. Okay, there's dollars plus 112. Come over here to dollars. 350. Now what happened? Oh, wait a minute. Now we got 2 1/4. Now we're down 2 1/4. So that's why I have these set to dollars, because it's the only thing that makes sense, really. I don't like having the P&L there at all, but if I tried to use ticks, I mean, I'd be upside down in spades and wouldn't even know it. I'd be thinking, oh shit, our points, there's -7 points and we're up 24 points over here. The problem is the micros and the minis. So this has got to be times 10, right? Or divided by 10. That's the difference, is the ratio. So that's why I leave it on dollars. I'm not saying that there's no upside on the hedge methodology, because I'm sure Anton does it and I'm sure he's profitable with it, but I'm saying I haven't figured it out yet. And I don't like being upside down like that. Back under the IB high again. I don't think I'm gonna, at this point in the day, it's 12 o'clock. I am certainly not, unless, oh wait, and yeah, be careful. POTUS is gonna be speaking here at the top of the hour, so that's gonna be it for me for about 2 hours. Whoops, I gotta stop hitting the microphone with my glass. That's not a good thing. Moved the mic boom, and now my right arm doesn't know what to do with my glass of green tea. I think it's okay. I think I'm doing everything right. Really disappointing. I really wish I could, well, this, I will say one thing, it's encouraging. I have the weekend now to homework and back test the bejesus out of this stuff, but I am not, disappointing. And there's nothing wrong with the idea of the hedging or the principle, and I'm sure Anton does very well. I know it's, it's operator error, I'm sure. And obviously in hindsight, oh, okay, so I took it off down here and now I banked that money, and then I'm going to come across the stop and I'm going to, take it off up here, and now I'm filthy rich. Wait a minute. No, I'm not actually. I'll have to really analyze the trade. Now, the nice part about Bookmap, besides the real clear plotting of the trade. Two things that I regret. There's no consolidation of the account because it's two separate instruments, and I don't know how to do that. I've Googled it, Bookmap. I don't think has that ability on any way. Execution Pro or Dome Pro or any of that stuff. And number two, I can't graphically display both the hedge and the other one because it's two separate instruments again. But the beautiful part about this clear graphic of all the elements of the trade, the entry and the add and the break even and the stop and all that stuff, is that in replay that comes right back. You can, I can trade alongside of this, but also these things, this entry will come in and then the price will go down, and this ad will have been there. It'll go to break even, and you can see everything at once. So you can either stand by and analyze what you did, what I did, or trade along with it, or trade ahead of it, or whatever else in real time. And the Bookmap replay is just a recording tick for tick or whatever, micro tick or something. You can't tell, and smooth as a glass, and works very well. And all of the things do, all of the associated things, the profit and loss, the number of contracts, the trades, the execution. If you set up a multi-bracket, that works. If you set it up like this and do the hedge thing, all of it just like it's real time. It's great. That's a real help. Now, if I'm doing the math right in my head, and I'm probably not, just roughing it, the Lucid accounts would still be positive, but a fairly good drawdown, because I think I was up about $300 or $400, and so now there's $2.25 out of it. So that's a substantial drawdown, which irritates me a lot. Not nearly as bad as if it were being a drawdown out of my account. That's the important part. And we're going to be at Trump time here. I'm going to use caution POTUS at the top of the hour. So I'll take this opportunity with from the top of the hour here to a little R&R, hopefully. Got a string of singles over there at 7406. Not a big one, but 3 or 4 down here off the bottom. So pretty disappointing end of the week, but kind of fits with the rest of this, with the rest of the ending, but bummer. And of course, if you're like some, you read this down here and got long asymmetrically, and boy, oh boy, up we go. This was a real interesting area right here that I didn't pick up at all. I'm trying to understand somewhere I can see that. IRT didn't help me any. Well, I guess, no, not really. If you look at it in IRT, I guess this is it. No. I don't know where the hell it is over here, to be honest with you. Oh, maybe it's down here. Here. It ain't easy being cheesy. Now this is pretty clear to me in these bars. This is what I'm talking about over on Bookmap. What the hell time is that? It's 10:15 and 9:40. Why isn't it just obvious as hell right over here? 10:15. Right here. Okay. So I guess that's right here. 10:15-ish and 9:40. All right. So here's that consolidation and the double tap right over here. I didn't see that at all. My long extravaganza is right here. Right here, and then the takeout. So just poor price action interpretation and trading on my part. No other way to say it. That I can see anyway. What I was looking at was here. Sorry. Oh God, I'm tired of this. So here's the doubles, you know. Here's where I was taken out. And again, I was trading in anticipation of the level, which is, I even have a hotkey in the stream chapter markers that don't trade in anticipation of the level. It does make sense in the edgeful data analysis that if, you know, let's get there. Okay. If we have an 85% probability that we're going to take the IB high first break, that's reasonable to lean on. It doesn't tell you when, you know, and timing is everything. And it's exactly what did pan out. We had, I tried it here, and in fact it was over here or down here or here, and it did take the IB high. So, you know, the data worked out. The data will be a positive, one more positive hit on the hit parade over here. It's all a matter of execution and timing. I'm guessing. So I am going to put this thing on hold, make sure the music's running. And I will certainly be on the side. Let's make sure that I'm not crazy. Wow. That's a pretty big ask there. Trump speaks at 12 o'clock. Trump speaks at coalition event at 12:30. Trump signing time. I guess he's going to sign more executive stuff. And what do we got down here? Any country that imposes a digital service tax will immediately be met with 100% tariff on any and all goods sent to the United States. What? I wonder when these guys are going to figure out that these tariffs are taxes on the American people, having nothing to do. So he's speaking early. He's been speaking for 22 minutes down here. So this is not good. Isn't that amazing? Boy, if anybody puts it in as service tax, we're going to tax the American people 100%. Jeez, I don't understand it. I don't understand any of this logic. Anyway, so he's been speaking since 11:22, one way or the other. And his scheduled speech is at 12. Let's see if that's still a thing. Yeah, definitely. And he's gonna, and this is gonna supersede any deal signed or not. So in other words, why would any country make a deal with the United States and enter into an agreement if it can just be circumvented or forgotten or torn up and they do something else? Does that make sense? Superseded by any, This tariff will supersede trade deals made with the country, whether implemented, signed, or not. So, if we have a trade deal with somebody, they'll just tear it up and do something else. I don't think that's good for us as a country, and I don't like the fact that we're going to have 100% tariff on something, a tax, because of that. That's pretty weird. I don't know what to say or think, to be honest with you. I know I wish I would be able to throw a quick trade on and get back to flat. That'd be kind of handy. But I'm not going to try anything, especially now. With crazy train lurking the halls. Wow. Almost all the way through the jazz. I am not going to be doing that. That's pretty for sure. That just doesn't make any sense. Maybe all those, Nobel Prize economists are wrong. Maybe it's not a tax.
banging around the IB high here still. POTUS is still on the microphone, so that's enough for me. I'll be standing by. Well, be careful. Trump is still on the microphone and not showing any signs of wanting to quit. So, yeah, just be careful. Mind your risk. Okay, so Trump has ended his remarks now. We'll see what happens. About 10 minutes ago. Market didn't like it much, I guess. Okay. Well, here we are right back at that same level again, huh? Funny ending. There's a lot of rhetoric coming around according to you're on Financial Juice. This is all the who the hell knows? All the rhetoric on both sides, I guess. wouldn't have any idea which way to jump today. We had the breakout, the retest, didn't do anything. So the statistics are not exactly playing out. And I think this hedge didn't work out worth a damn, so I'm going to leave it alone today until I figure out exactly. I'm either going to figure out a positive approach to this hedge technique, or I'm going to drop it and just get back to the multi-brackets and take the stops. I understand the whole concept about the hedge gives you the time, buys you the time, prevents the hedge trade management by replaces the stop, but that's the way the hedge is unwound is really critical. So, yeah, that's pretty important. Power hour, huh? Boy, I'll be glad when this day is over. I'm tired and it's been weird. Frankly, quite frankly. Back to the developing value area low and the value area low from yesterday. And the 25% range. We finally actually did retrace to the 25%, a little further now. Whatever that means, I don't know. There's a definite series of breakouts and retests. I would say they're poising for something, but I wouldn't know what. I am. Yeah. I don't know. I would be in the I don't know. The I don't know response is don't trade. Bookmap for drawing stuff very well. no idea what might be going to happen here. I mean, if you want to look at the edgeful data and the typical approach, the IBI breakout, 25, somewhere between 25 and 50%, and retrace. But I don't think there's, that seems pretty far-fetched. It seems pretty far-fetched, right? Breakout, retrace. I don't think that makes much sense. I don't think that makes much sense. And it could be getting ready to do that exact thing right here, right now. Oop. Hey, Panda, how are you? Are you sleeping? We've had some pretty violent closing swing trades the last 2 days, which are also, need to be aware of that. 2 days in a row now, we've had closing swing trades that came all the way across the range. Just a good time, if you got something else to do, probably go do it. My opinion is kind of more or less, if you haven't made your money by now, This is a low probability time to be trying to do that. As far as I'm concerned. And everybody trades differently. Some people probably only trade the power hour, I suppose. Well, there was a short off the POC. That's nothing I would ever recommend. So, don't know if we're getting the volume out of this thing, but I hope so. You're more comfortable this way. You remember we opened gap down substantially and outside bar, so, or outside range, whatever you're gonna call it. So we've closed the gap and closed everything and come all the way back up and across to the other side, to the value area high. So the gap rule's pretty much played out to the tick. Literally, well, a little more than the tick actually. There's the gap. There's the value area high, and the gap took it up above there. So we're, I mean, good. That's what I was aiming for over here, and didn't work out. Simply because I closed the hedge wrong. And I didn't have enough, too much risk down here. Well, let's see, is that true? 16, I say 17 to 9. So that's 8 points. Yeah. Wait a minute. I can probably look at this. 80. Probably be borderline. I'll have to figure it out, but that's undoubtedly borderline drawdown. Remember, this range is way crazy now. Not even close. Well, right now we're 2.5 handles wide. But what's the drawdown? Let's see how that would work. Nope. Yeah, that would be 80 ticks. If we took 80 ticks off of that, that would be the exceed the drawdown. And that's 8 points times 4. Ooh, that'd be mighty close. Hi, Panda. What? So let me see how I would do that quickly. Average price in is 18.5. We got down to 9.5. So that's exactly 9 points. That would have been about half the drawdown. So it would have been okay. Would have worked. But I'm really curious to see if there's any problems with us putting the hedge on as far as this outfit goes. Okay, so we're going to be doing the market recap, and I'm glad. I got to say, I'm glad today's winding down. I don't like to be on tilt at all. Yeah, so here's our day. We started out gap way down. There's the open. Way down below outside day, and gap way low. 33 to 60, so, or 80, so 50 points gap, and they came right back and closed the gap right here. And then they did this dipsy doodle and went all the way up and took care of the value area high. So they closed everything up and went and basically satisfies the gap rules. So that's a pretty amazing trading on the part of somebody. This is IRT, same idea. There was our open way down here. There's our IB low way below us. They've never looked back at that for a while. And the minis here, same story, of course. probably easier to visualize what happened over here. We have a big, well, at one point there was a big buying tail. Now it's a big selling tail. It's just flopping back and forth. This will be included in the micro composite because it's clearly overlapped. This is IRT, which is my charting package. These are the micros. Well, and this is the market profile, the minis. I don't know whether we've gotten any success over here or not. I kind of doubt it. Well, I restarted, so now I've got to get rid of all of this nonsense. We had a no good on this one. Well, here we go. Here's 1 to 72 ticks. These are graphic representations of this trading system being evaluated every 30 seconds bar by the computer. And if there's a trade or whatever, any kind of an action, it's plotted over here. This doesn't go anywhere. It stays within the IRT simulated environment, but it allows me to visualize what's going on and make tweaks in the rules or not, or for trading in the live environment. And this one is similar idea. I got to start over here now. Sorry about that. Boom. Oh, come on. Okay. And here we have a trade underway down here. Oh, we have a trade underway down here. L, where did that L go? Right there. Well, none of these worked. What's going on here? Fine. Okay, I want that to be. I want this to be hidden. Okay. Orb. Hidden. 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 Middle. Okay, hidden. Fence. Hidden. B18, hidden. And okay. So this trade, which is plotting down here, and why is this opening range still doing that? So irritating. There we go. So this has taken this trade right here, and it's a long, and I can show you how it works. We broke out a bunch of places. This is the trigger, and it's been entered. Why it's firing all these triggers, I got no idea. It's not supposed to do that. That's one of the reasons that these systems, which I'm struggle to create, are within the simulated environment. But here we are, long, and still long. No, it's taken out right there at plus 20 something, plus 20 ticks. This would be the exact edge full. Well, this right here is right here. There's the pullback between the 25 and the 50, as I mentioned, and there would have been the trigger long, and up we go. So this price action right here is being traded right here. So I'm got that down pat. I'm just spooked at, after 4 o'clock in the afternoon to enter some kind of thing after we've had the crazy price action we've had. So there you go. And let's see what's next on the agenda here. Well, you can see this up here. So let's get on with the news, which is investing.com. Let's look at next week, which is important. Monday is basically nothing in America. These are obviously the countries. Tuesday, we've got S&Ps, JOLTS, Chicago PMI. Wednesday, non-farm change, global PMI, ISM. Thursdays, non-farm rate, non-farm payroll on Thursday. What? I'm not sure why that would be not Friday. But there you go. Next week is non-farm payroll. It's supposed to be the first Friday of every month, but maybe it's because of the holiday. They're moving it out to the Thursday. Okay. And jobless claims. So Thursday is going to be the bell ringer next week. Friday, and obviously the 4th is the week after that. Financial Juice is the other news source I have, and I keep it up for 2 reasons only. This squawk kind of shows me what's going on as, best I can. And they pull these kind of random things like Trump speaking, signing time, this kind of stuff into their schedule so that I know there's potential risk. That's how I was announcing these kind of things in the, there was one at 12 o'clock, which is gone now. Don't know why. But, and then you can also see, down here, Trump said this, and Trump said that, and Trump said something else. And what I look for typically is where it says ended remarks. Ends remarks, right there. So that means it's quiet until the next event, which is going to be 15:30. This is Friday, so there will be no Globex until Sunday evening. I will continue the Globex trading. I really had a big problem with it last night. Didn't have a problem with it. It's when the drama here started, so I didn't. I took a trade short. Drama started. I flattened out right away, and literally moments after I did that, it fell off. I can show you most succinctly, probably right there. I got short right about here, and got crazy, away from trading, but it was some drama, and I closed out scratch, no problems, no losses, and then this happened. Pretty frustrating. And the tilt continues. So the Globex will come online. The Globex stream will come online at 1700 Sunday evening. Lasts until about 20:30 or so. And the idea of that is to evaluate if there's some interesting trading opportunities in the orb trades for the Globex and the Asia. And as every weekday, every trading day, there will be a risk neutral trading. This live stream starts at 8 o'clock in the morning Central Standard Time and continues until 1500. So at 1400 today, we'll have our 1450. We'll have the market on close in balance, and then we'll take it into the close of the stream. Have yourself a great weekend. If I don't talk to you before, I'll say it again, but have fun, stay safe, and rest up. It's really important to stay healthy and well rested, well hydrated, and if you're on emotional tilt, keep away from the mouse. I didn't listen to myself very well there, but I did manage it okay. The problem I have here in this trade, which I've talked about ad nauseum, is the taking the hedge leg off, and that's what cost me the difference. So the cost of this trade, including the hedge, ended up a stop of $225, which is however many ticks, because I have to keep them on dollars now if I'm using this hedge thing, because I have the hedge instrument is the mini, which is over here, and the micro is the original risk here. So there's that. And I am not going to do that anymore until I have it figured out I like very much the idea of no hard stop, the hedge trade management instead of a full stop, but I don't see how to manage it properly, so that's my fault. Irritating, for sure. The difference, and one of the reasons it's irritating, is after the hedge is triggered here, then it's a 10 lots in the micros and a 1 lot in the minis. So it's essentially, but they're counteracting, but still, you're still dealing with basically 20 micros, depending on how you go in two different directions. And that's why taking off the hedge leg is so important, and to do it right. Well, we had our pullback, we had everything, we've had the thing, and now if they're going to take it up here to the initial balance high, it will have proven the edge full strategy to the tick. These were just lines I put on here to look at this consolidation here and see what was happening with this bar idea. Bar meaning breakout and retest. Okay, 5 more minutes for the market on close and balance. And see what else is going on. Did anything crash or close or something? No. Okay. And of course, like anything with trading, it's so easy to look in the rearview mirror and see exactly what you should have done. But what should you have done right there? I mean, or right there. Did I know this was going to happen? Nope. In the perfect world, if I was clairvoyant, hey baby, hi Ben, I would have obviously been in the hedge. I would have taken the hedge leg off here, and then this would have gone on to the moon. I'll watch the replay and I can be real That's one of the real advantages to this stream and Bookmap and being able to replay it, is I can watch exactly what was happening, and my voiceover provides insight as to what I was thinking at the moment. So I can watch and listen and see what was really going on at that time. That's really important. All right, there we are. Market on close and balance. Pretty good timing, huh? Yeah, there's somebody now trying to sell ideas or some sort of thing about how to make all the money you ever wanted to make on these market on close and balance trades. Which, yeah, good luck with that. So let's see the market on close and balance. Let's see what we got to see. Well, they're not. There they are. Ooh, 4,500,000,000 sell. 3,200,000,000 sell side. 89 million sell side. 870 million buy side on the Mag 7. Those are the closing numbers. And here's Scott, another one. Oh my goodness, what's this now? What is this one? Religious Library. Commission report. Huh. Okay. I don't know what the hell that is, but that's what, oops, that's what they're doing. And here's the market on close and balance that I was busy watching for. So there we have it. Okay, I'm going to spend a lot of time doing homework, and hopefully this tilt will ease up and go away. I have a lot of work to do also, you know, a lot of, which is good. Get outside, get hot, sweat like crazy, do the lawn, do the house, do the stuff like that. So that's a good thing. And it's a weekend. And I suggest everybody that's in the sound of my voice, remember that the most critical piece of equipment in your trading office is sitting on your side of the monitor. And I mean that very seriously. We spend so much money on monitors and software and indicators and courses and whatever else you spend your money on to do with trading. Think about the most important thing in your office. Your eyes take in all that data. Your brain processes the data. And you use that information to trade and make financial decisions for yourself and your family. You need to take good care of yourself, rest your eyes every couple hours or hour and a half in the day. You know, be fit as you can be, exercise regularly, even if it's stand back from your desk and do body squats, you know, just do deep squats. Get a couple of dumbbells. You can stand there watching the markets and do curls. You don't, that's what I do. Don't even have to leave the office or leave the desk. And I have a chin-up bar hanging in the door to the office. Every time I go out or come in, I have to do some chin-up. I do as many as I can, 10 or whatever chin-ups, pull-ups. Just something, you know. You got to keep your blood pumping and keep yourself as fit as you can. So that's really important. And obviously, be safe. Enjoy yourself. Work-life balance is really important. And then, you know, once you had a break and cleared the air and cleared your head, get back into it, do your homework study, and then get ready for Sunday night. Globex stream starts at 1700 Central Standard Time. And this RTH stream, as usual, as always, starts at 0800 Central Standard Time on Monday morning. So let's just take this into the close and watch what they do with it. Remember now, 1500 or 1530, we've got the more POTUS stuff, so I'd be real cautious. And of course, the market's going to shut down at 1700 for good. So you don't want to be holding. You don't want to be stuck in a position and holding overnight over the weekend. And watch for this closing swing trade. The last 2 days we've had I don't think there's any phenomenal move they've got up their sleeves today, but the last 2 days we've been way down off, we were way down off the lows and went all the way across the range. Took out both IBs. We got about 2.5 minutes on the weekend here. Got about 2.5 minutes on the weekend, so let's hope that everything goes okay. And remember, we still have one more hour. So, and who knows what they'll be saying it. That's a signing thing or something, so I suppose that's going to be a lot of hot conversation, because that's usually the case. Executive orders or whatever it is they're signing. Whatever it is, I'm sure it's great. I'm sure it's great. Make sure I've got all this mic working. I think I like this new boom angle. Look at there. There you go. There's a closing swing trade kicking in. So everybody that thought they were going to get long and punch the IB high, here we are. Is that can think again. There they have it, almost across the entire IB again. Wow. So what did they pull? They pulled 69, let's call it 70. 27. So 50 handles. 50 handles. One, two, three, four, 5, 6, 7, 8, 9, 10. Does that sound all right? I need to get this down a little bit. A bit more like that, and then I can still reach across under there, and yeah, that's pretty cool. Hopefully that sounds all right. Trying to get the boom thing so I'm not obstructed vision at all, and I can get to the mixer buttons and all that kind of stuff, and I think I'm going to go with that right there. Well, there you have it. Have yourself a great weekend. There's the closing swing trade. And once again, a bunch of people got hammered. That makes sense. There was a big market on close imbalance, but typically I don't see a reaction like, what the hell is this? What happened to the data now? Huh. Well, IRT's doing all kind of magic tricks. Look at, don't ask me what that's about. That just happened. All right, I'm gonna wind it down. No IB tonight, or Globex stream tonight, so I'm happy about that. And hopefully things will come right around here. And have yourself a great weekend. I'll be back on terrorizing the trading airwaves here at 1700 Sunday evening. So take good care of yourself, and thanks a lot for coming by.